the South African Reserve Bank will this afternoon, if you want to know the exact time, 3 o'clock, it will announce its interest rate decision. The expectation this time around, after the second consecutive hike in January, is that the repo rate might again be increased by another 25 basis points. We take a look now at the growth of the first-time buyer book in relation to the low investment rates. Joining me for this conversation is the head of Absa Home Loans, Nondumiso Ncapai. Ms. Ncapai, thank you very much for your time. How does that book look at the moment? Perhaps if we look at the 2-year period, let's call it the 2-year COVID period. It's seen people lose their jobs and companies shutting doors.
Absolutely. You know what we've seen as we go back to the past 2 years, in fact, an interesting time for the mortgage market because the market has remained quite resilient. With the interest rate cuts that we had during that time, we certainly saw a significant increase in consumers wanting to enter the market for the first time, and no doubt the first-time buyer market increased significantly over that period, given the benefit of the interest rates decline.
Exactly, and that very same market might be in trouble now because the interest rate cycle is going to be that of increases as opposed to the decline that we saw with the COVID hitting our shores. Should we be worried, or should the first-time home buyers as well, should they be worried?
You know, we always say that, the decision to buy is always going to be an individual decision based on your own circumstances and affordability. On a broader level, what we do expect is that first-time buyers may pull back. Although they remain resilient, they may pull back, given the pressure that may come from the interest rates that are going to increase over time. And only those first-time buyers that are truly ready and understand what this means over time will still enter the market, but we do expect that segment to pull back slightly and allowing other segments that are probably much more, affair with the market coming in. And here we talk about the repeat buyer segment, so those homeowners that currently own property today that may see opportunity in certain pockets to then sell and buy again.
Before we talk about your very own financial performance, which was driven in part by the registering of new mortgages, for those people that already have mortgages, what would your advice be in where they need to cut back in order for them to not default on their payments?
Yeah, absolutely. The number one is your budget. You must always have a budget as a consumer, whether you have property or not. And I think second to that is closely monitoring those expenses and removing unnecessary luxuries that may put unnecessary pressure on your budget. The other for us always is going to be save where you can and make sure that you cut any request for new credit to make sure that you can absorb the pressure that may come from interest rate hikes. We do offer as banks solutions for consumers that may feel pressure, and we say to our consumers, you rather want to speak to the bank much earlier than later, because there are solutions that are geared towards cushioning and providing support to existing homeowners during this time.
Let me talk about the one element that gets most people into trouble, and that is the decision about whether or not to buy a vehicle. And you spoke about unnecessary luxuries. For some people, it may be termed a luxury, but for others, it actually is a necessity. If you look at what is going on in Cape Town this morning, in Nyanga to be exact, people there simply can't rely on public transport. Why? Because taxi drivers are unhappy about the impounding of their vehicles and the trouble they have to go through in order to get them released. And so what do? They cause chaos for other forms of public transport. Where do you draw the line about whether buying a new car is a luxury versus actually having a car as a necessity for it to take you to work?
Yeah. You know what? The simple principle is always going to be affordability. And that affordability is what underpins the National Credit Act. You know, for us, it's really about you being able to afford and buying within your means. And you're right, absolutely. Mobility, you know, for someone else may be critical at this point in time, and for another individual may not be critical. So we always come back to that principle to say the decision to buy, whether it's a car or a home or any other purchase for that matter, must always pivot around your individual affordability. The needs do differ, and again, you need to assess your own needs and prioritize based on those needs so your budget can be unlocked to then meet the needs that are prevalent at that point in time.
Yeah. All right. Let's conclude the conversation around this issue of, or the conversation around mortgages. New mortgages that were registered in the last financial year, they helped increase your performance as a division within Absa, and that increase was by 49%. Do you expect similar increases now that we are coming off slightly on the COVID issues and the interest rate cycle, as we have been talking about earlier, increasing from here on?
Yeah. So, you know what, the mortgage market has been phenomenally resilient, and I think the interest rates declines that we've seen over the past 2 years has really given the mortgage market that extra boost and support. And obviously with the mortgage market, there's different segments that come in, and to what we discussed earlier, first-time buyers seize the opportunity, and we've seen that growth just based on the numbers we spoke to now. As that changes over time, we do expect that the mortgage market will remain resilient, but the change in the shape and who the consumer is may shift. It may not be to the levels that we've seen, as you quoted last year, but we do expect that the market will continue to be resilient, but that shape or who the consumer is may shift from first-time buyer to another type of buyer coming into the market.
Nondumiso Ncapai, head of Absa Home Loans, thank you very much for that educational conversation.